Whenever I think about my best and most profitable investments, I've always been able to lock in profits. I'm going to show you how I take a cash secure put option contract and turn it into a great investment by locking in those profits. One of the easiest ways to lock in profit from a cash secure put is to actually close the option contract. And tactically, you may find that it makes sense to close an option contract because there are some other benefits. If you're new to my channel, welcome. Here you're going to find that I'm publishing videos about small account investing by selling options for income and other wealth building strategies. In this video, I'm going to share the 3 reasons why I close a cash secure put option contract. Plus, I'll demonstrate exactly how to do it using a live account with a real option contract. Here's a daily chart for GNUS Brands International, stock symbol GNUS, going back to February of 2021. Let's jump ahead now and focus on March 11th. GNUS Brands International opened at $2.25 and finished out the day down and closed at $2.13. Since this was a red day, I decided to sell a cash secure put. There's a support level at $2.06, so I decided to sell a cash secure put with a $2 strike price, thinking that if the price dipped to $2 and I was able to get the shares assigned to me, I could pick up the shares and the price might recover and bounce right back above the 206 level. Let's jump into my account history and take a look at the actual transaction where I sold the cash secure put. So here's the transaction here. I'm going to go ahead and click on it, open it up, and we could see that it's for stock symbol GNUS, and I'm selling a cash secure put with a $2 strike price and an expiration date of March 19th. Now, I submitted this order on March 11th, 2021, and my order was filled that morning at 6:36 a.m. Pacific time. Now, for selling this contract, when it got filled, I was paid 23 cents per share, which meant I received $23 in premium as a credit deposited directly into my account as soon as this transaction contract was filled. So with my option contract filled, if we jump forward and we consider that if the market price finishes above my strike price, then this option contract would expire worthless, and the $200 reserved as collateral would be released back to me, and I would still keep the $23 in premium as profit. Now let's jump to March 17th to see where GNUS closed. So at the end of the trading day, GNUS closed at $2.27 per share. Now let's check out the current price for a put option contract with a $2 strike price. Here you can see the option contract that I sold and the 23 cents per share in premium that I received. And now the current price for this put option contract is 4 cents per share. At this point, I decided to see if I could buy back my contract and lock in a profit of at least 80%. And 80% of the 23 cents per share that I received works out to exactly 18.4 cents. So my goal would be to buy back this contract so that I net 18.4 cents or more per share. So I plan to issue a buy order for 3 cents per share, and my final net would then be 20 cents per share, and this would allow me to capture almost 87% of the total maximum profit from premium. The first questions I receive whenever I mention that I'm buying back a contract is, hey, why am I buying back my option contract? First reason I think of to buy back an option contract is so that I can lock in a quick profit. Buying back the contract lets me capture 80 to 90% of the premium. So it's a fast and easy way for me to end the option contract and still walk away with money in my pocket. Reason number 2 is that I'm not ready to get assigned the shares, and I believe there's a high probability that the option contract would actually get executed. So buying back the option contract removes that obligation. And this could be because the market conditions have changed and fluctuated to such a way that this option contract is no longer favorable to me. Or maybe my situation has changed and I'm not ready to be assigned the shares in case the option contract actually gets executed. Reason number 3, there's better investment opportunities, and so it's better for me to exit this transaction so that I can pursue other opportunities. So closing the option contract frees up cash because I no longer have money reserved as my collateral. And now I can take that cash and use it for other investments, or I can withdraw it and use it for personal expenses, or I can just park the cash in my account and let it sit there and have it ready to go in case another opportunity presents itself. And one of the next questions I receive is, what happens to the original buyer of the option contract I sold? Option contracts are bought and sold continuously during the market, and the algorithms and processes are in place so that all obligations for option contracts are met. If you like this video and it's been helpful, do me a favor and smash the like button. Next, I'll walk you through how I executed a buy order in order to close my option contract position. Here we see the details from an option contract that I sold. This is for symbols GNUS with an expiration date of March 19th. And here's the 23 cents per share that I received when I originally sold the option contract. Current price or the premium value for this contract right now is 4 cents per share. Now I want to submit an order to buy back this contract and see if I can purchase it for just 3 cents per share. So I'm submitting a buy to close order, and here are the steps. Submit my order, I press trade, and then buy, and I specify one option contract, and I set the limit price to 3 cents, which represents the 3 cents per share I'm willing to pay. This buy to close order, I'm going to pay $3 to buy back the one option contract which is open, which will release the collateral and remove my obligation to buy the 100 shares of GNUS for $2 each on or before March 19th. In other words, I'm paying $3 to close this open contract. So I submit my order, it gets received and placed. Let's go back into my account history and see how I closed out this transaction. Here's the transaction where I actually closed the option contract. Let's go ahead and click on it so we can see the details. So from here you can see it's for stock symbol GNUS, and it's against the $2 strike price, and I'm actually buying a put for the expiration date of March 19th. So I submitted this order on March 17th, and you can see it was filled at 7:37 a.m. Pacific. Now the limit price was 3 cents, so this contract got filled at 3 cents per share, which meant I purchased this contract back and paid a total of $3. Next, I'll walk you through all the different pieces of this transaction so you get a full understanding and appreciation for what just occurred. So on March 11th, I started off the day with an available balance in my account of $200. During that morning, I ended up selling a cash secure put for Genius Brands International, symbol GNUS. Now this cash secure put had an expiration date of March 19th and a $2 strike price, which required me to reserve $200 as my collateral. When I sold this contract, I received 23 cents per share, and I received $23 as premium deposited immediately into my trading account. Now when you look at my available account balance, I had $23, and then the $200 that I initially started out with is still in my account, but it's reserved for my collateral. On March 17th, I had seen that the market conditions had changed and that the value of the option contract that I had sold, originally for 23 cents per share, had dropped to just 4 cents per share. So at this point, I decided to buy back the contract, also known as buying to close, and I offered to pay 3 cents per share. My buy to close option contract got filled, and I ended up paying $3 for it. Those funds were debited from my account, so now my available account balance was $20. My amount reserved was still $200 for my collateral, and my total profit and loss is now $20. Once all monies and activities were reconciled and the transaction was closed, here's how my account ended up. My available account balance was $220 because the $200 that was reserved for collateral was released and returned back to me. And my total profit and loss for this transaction, $20. So I used the $200 in my account as collateral in order for me to sell a cash secured put. Now I ended up buying that option contract back and closing out the transaction, but ended up with $20 profit in my account. So this ended up being a 6-day option contract, and I was able to profit 10% using my small account of only $200. You can get access to the list of stocks that I use for option trades just like this one by joining my Patreon. So consider joining my Patreon, where I share exclusive videos of my stock picks for every week that I use for profitable trades. I also include my research notes, my stock analysis, and trading strategies for the stocks I pick to watch for the week. And of course, all my videos posted on my Patreon are ad-free. If you're still watching this video, I just want to say thank you so much. I really appreciate it. And I also want to wish you good luck and lots of success with all of your trades.